I got to talk to you guys about this because the bottom line is with Bitcoin, you have to start to be aware that there are factors here that are going to cause issues for Bitcoin. All right, so right now, we are at a major resistance. I've said this till I'm blue in the face. The 30,500 level is the level to watch. A lot of people kind of round it down to 30,000. No, the technical level is the technical level, 30,500. Look at what we've done right along here on the chart. Bitcoin has hammered on this over and over again. This is the daily chart. We even had a doji right here, which is a bearish signal, where it popped above and then got slammed down right to that level. I love how it flushed 2 days ago, rallied back, and now it's flushing again. The level I'm watching for short-term bias. So right now you're at resistance, but honestly, resistance can be broken. That's a possibility. But one of the things you have to recognize here is this longer-term trend line, which I just discussed with my live traders in office here just 10 minutes ago before I started this broadcast, is that this is a long-term trend, right? You hammered on it here, you hammered on it right here, you broke above it, now you hammered on the opposite side. If we break below 28,500, 400 area and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend. So for me, you're now, and by the way, these two lines are going to meet. So this is going to happen over the next week or two at longest. But right now, look for this support line right here. Also notice, I want to show you this, how if we connect these highs right through here, this line actually merges right at that point. So 28,500, 400, if we break below that, that is very bearish for Bitcoin. Okay, the other thing I have to talk to you guys about is there's so much FOMO out there. There is so much. You go on Twitter, you go on Instagram, you go anywhere out there. Everyone's talking about alt season. Everyone's talking about this. The alts are going to start going 100x or 10x or 5x, whatever it is. My issue with that is that basically because that narrative is out there, everyone's already positioned themselves long. If you haven't seen the alts go yet and everyone's already believing that it's going to happen, that's a very, very concerning issue. Because again, think about this. Who's going to drive the alts up now? If all the little investors are in because they believe the alt season is coming after the Bitcoin run, how or who is going to now push it up via using massive amounts of money? That's problematic. Remember, the psychology of the market dictates, and psychology is key right up here.
The largest cryptocurrency by market capitalization tripped early Wednesday, falling first below $30,000 for the second time in 3 days, and hours later, below $29,000 for the first time in more than a week. BTC was recently trading at about $28,930, down about 4.6% from Tuesday, same time, and far from its heights last week, when a moderately encouraging consumer price index and renewed investor optimism buoyed markets. Hello and welcome to Money Talks. In today's video, Gareth Soloway shares with us his outlook on the Fed hiking rate, the CPI report, and his new prediction for Bitcoin in 2023.
The kicker here is partly earnings, right? We got some earnings out of Netflix. We're going to discuss that in just a minute. But overall, really what's going on here is more than anything, you have some Fed commentary that is starting to spook the market a little bit. For instance, I believe there was one Fed, I don't know if it was Bullard, but he basically came out and said he doesn't see a recession and the Fed has to stay the course and continue to raise interest rates. Now, the issue with that is that we just heard last week from the Federal Reserve that we were going to have a mild recession. So there's this dichotomy, there's this divergence building within the Fed where some people are still saying, hey, listen, mild recession, but we're going to still raise interest rates. That's freaking the market out because the market is smarter. You look at the 10-year yield, it's all the way down, all right? You don't have the 10-year yield trading where the Fed funds rate is trading at 5%. You have it into the 3% range because the markets are anticipating that essentially we're going to have a recession. So these are things that are going on right now that we have to be aware of, and that's pushing the markets down. There's also another factor here, and this is something that I've been surprised has been a lagging indicator for the markets, that the markets have not picked up on. Not only did the Fed say that we're going to have a mild recession, but we also heard Warren Buffett last week say that one of his retailers that he owns the year-over-year sales were down 22%. 22%. That is a massive number. All right, you know what the market did when the Fed said a mild recession, when Warren Buffett said this? They did nothing but float. They floated higher, in fact. The market is ignoring things. And one of the sayings that I always tell people is this. I say, listen, guys, the market only cares when it cares. And it sounds like a weird saying, right? Like the market only cares when it cares. But the bottom line is what that means is the market will stay in a euphoric stage until it finally gets slapped in the face, realizes something is wrong, and then you see massive selling pressure. And I'll tell you this, look at the VIX chart. You look at the VIX chart. In fact, I want to bring up the VIX chart right now here, guys. Let's take a look at this. The VIX, to me, is a very scary scenario here. All right, so we have the VIX. And the VIX, the volatility ETF, number one, it's bouncing today. But prior to today, the VIX was trading at levels it had not seen since early January of 2022. Now, remember, the markets topped out in 2021, late in 2021. So you're seeing a volatility index, which, by the way, is a fear gauge. A lot of people don't understand the purpose of the VIX. The VIX essentially tells us how much fear is in the market. All right, and the reason why that's important is to say that, hey, listen, if the VIX is showing us that there is no fear in the market, it is a contrarian indicator. That's how I use the VIX. So the fact is that when I see the VIX at 16, at 17, I start to say, listen, people think everything's hunky-dory. They think everything's perfect. And to me, that's problematic. That tells me something is wrong or going to happen. It opens the door for a surprise because no one's expecting a surprise. So what do? I start shorting the market. I start nibbling on shorts. You know, whether I'm shorting the NASDAQ, whether I'm shorting the S&P 500, whether I'm buying the VIX. I'm doing all of these things because, again, the signals are starting to emerge.
Ether continued its mirroring of BTC this week, falling around 7.1% to trade at around $1,945. The second largest crypto in market value topped $2,100 on Tuesday after tumbling on Monday along with most other major altcoins. The second largest crypto in market value had been on an upswing in the days following the much ballyhooed Ethereum Shanghai upgrade, the final step in the platform's shift from a proof-of-work to a more energy-efficient proof-of-stake protocol. The UK's higher-than-expected inflation numbers seem to be hitting a bit too close to home, both in the US and in other countries where monetary policy is tightening and fears of a recession are growing, Levin wrote. It seems as though all these macroeconomic concerns may finally be catching up with Bitcoin. He added that after Bitcoin's strong gains in recent weeks, it's not surprising to see consolidation. Crypto markets have always been particularly susceptible to price fluctuations, so none of this should be cause for panic.
And again, the Fed is telling us this. The Fed is telling us that we're going to see a recession. And by the way, I went off on this. I had a David Lynn interview yesterday. We talked about this quite a bit. But the bottom line is, if the Fed is telling you, let's be honest with ourselves. All right, this is look inside. Look inside. If the Fed is saying we're going to have a mild recession, and remember, their track record is that, oh, don't worry about inflation. It's going to be transitory. What do you guys think when they say a mild recession? Do you think it's just going to be like, nah, no big deal, mild recession? Personally, I'd be a little bit more nervous. All right, and again, that's the kicker. Not only that, but then you had, again, a Fed official this morning saying, hey, we got to continue to stay the course and raise rates. So at what point does a mild recession, which probably already means that they're telling you it's mild, but they know it's going to be worse, if they keep raising rates, what happens next? A mild recession turns into them telling you it's going to be a mid-level recession, and then it actually is going to be a much worse recession. And then you go, by the way, there are stocks out there, Apple, Microsoft, trading at valuations that they're almost at all-time highs. They're trading at forward PEs where they were a year or two ago when we had the bull market. That is not healthy. They are being used as a cushion. They're being used as a safety net. Those, to me, are some of the biggest shorts out there when reality strikes that we will see a recession in the second half. And it's not just going to be a small recession. It's going to be a long recession.
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.